Good evening, everyone. We're going to start shortly. All right. So, good evening once again, and welcome to the weekly webinar of Week Ahead of the Religare Technicals. So, as some of you know, just for those who are joining us for the first time, that the pattern, how we progress during the webinar. So, first we talk about the performance of this week, and followed by our view on the key indices, both Nifty and the banking index, and some of these stock chart patterns which look upbeat or downbeat depending upon the market scenario, followed by a quick poll, and we'll end up with a Q&A. So anything related to the webinar you can ask in the end during the Q&A session. So let's get started with a quick disclaimer that the information shared during the webinar is not a trading or investment recommendation. So please check with your financial advisor before making any trade or investment based on this. So second consecutive week of gains, and I would rather say it is the first week a decisive gains, because last week it was only the Friday session that we had positive move. Rest of the week it was sideways to negative tone. But this week, the tone was positive from the beginning, and we maintained it till the end. We surpassed the key hurdles, and both Nifty and Sensex could manage to end nearly 2% higher. As you can see on the sectoral front also, all the sectors participated in the move, wherein media, reality, energy, IT, and financial services, they were the top gainers. Talking about the top 5 gainers and losers in the Nifty 50 basket, Coal India, exceptional performance, 19% kind of a gains, followed by L&T, HCL Tech, BPCL, and NTPC. So across sectors, you can see that we had the performers. Similarly, on the downside, we have a couple of names from the auto basket, M&M and iShares, which ended marginally lower. So largely, it's not that very negative, I would say, because except M&M, which is down around 1.5%, the rest of the stocks are, somewhere close to around 1%. So it's not a very decisive negative, I would say, close of within the Nifty 50 basket. So with this, how we should approach the market. So this is the daily graph of our key index Nifty. So as you can see that there was a kind of a distribution or a correction that we were seeing in the last several weeks. Last week was positive but not very decisive. But this week, from the beginning, the tone was positive with a breakout from this, declining trend line. So from this breakout, with every passing day, we moved from strength to strength. If you remember that we were discussing about 19,650 as a key hurdle, the area of reversal for the index. So we finally surpassed the same and decisively closed above the same as well. So what it means is that the corrective tone that we were seeing in the market positionally has ended, and now we are inching towards the newer highs to a new record highs. So 20,000 being the psychological hurdle and a new milestone, obviously the market could take a breather around that area, but 20,300, 20,400 is what we are eyeing as the next key area of resistance or the target area for the Nifty. In case of decline now, 19,650, which was the area of resistance earlier, should act as a support. and then this 19,500, which is the 20 EMA on the daily charts. So broadly, the tone is likely to remain positive. Yes, we could see some consolidation, taking clues from the global markets, wherein we are not seeing a very decisive trend so far, especially the US market. So that could trigger a bit of a consolidation or a pause or marginal profit taking in between. But the tone is likely to remain positive, at least on the domestic front, is what we are anticipating. So based on that, 20,000 and 20,300 is what we are eyeing for the next week. Now, talking about banking. So banking, it's a very interesting, price action that we have witnessed in the recent week. So honestly, like this, as you can see, it's a distribution pattern, which we call as head and shoulders. Some of you might have heard of this. But, it not only negated the same, it formed a reversal pattern also. So during this, after this decline, we had this phase of consolidation where it formed a triangle pattern. And in this week itself, we have seen a breakout. So the negativity that, we were discussing, that banking is underperforming, we have multiple resistance to cross. It had decisively crossed the key hurdle of around 44,700, and the next area of resistance also around 45,100. So with participation from banking, anyways, other sectors were contributing earlier, be it auto, metals, pharma, FMCG. On the rotational basis, banking was sitting on the sidelines. So with the breakout from the key hurdle around 19,650, alongside with the recovery or up move in the banking, indicates and adds to the positivity that yes, this move which we are seeing right now is here to stay. So for banking, we are eyeing 45,600 to 46,000 level. Could be the area of resistance. On downside, 44,600 to 44,000 is going to be the area of support. Largely, we were seeing that mixed trend within the private banking majors, which is capping the upside. But now we are seeing improvement in the environment. Means of late we have started seeing that SDFC, Kotak, which were witnessing decline or constantly we were seeing diverged move from Axis Bank to ICICI and all. They have also started witnessing some recovery. So this is positive. Sorry, and based on this, we expect banking also to participate, with the other sectors. But yes, one needs to be selective in this space, and stocks like IDFC First Bank, Federal Bank, Axis, ICICI, that remains the top preferred names. Despite the recovery that we are seeing in SDFC and Kotak, it's more of a recovery. So we need to see that whether this recovery sustains, and they also form some decisive reversal pattern. So as of now, stick with the counters which are trading closer to the record highs within the banking space. Now, on stock specific front, how one should approach. So this is something which one should, be very clear of, considering the kind of outperformance that we have seen in the mid cap and small cap basket. So, instead of chasing momentum now, one should focus on the area of strength or the stocks or sectors wherein we are still seeing possibility of catch-up move, or where we have clear risk to reward in the favor. So first name on the list is Bata India. We had discussed this counter earlier also. It's trading in a declining channel on the weekly chart. We had this breakout. Post this breakout, we had this 4 or 5 weeks of consolidation. But during this consolidation, it manages to hold this average around 1650 levels. So that gives us confidence that it's just a normal pause, after the breakout, that participants are still getting an opportunity to enter for the fresh longs, and the risk to reward is still favorable because 1650 is strongly we are holding amid this consolidation. So this is one such counter which one can look at instead of chasing momentum is what we can see. Another stock on a similar line is SDFC Life. So the stock has been trading in a broadening formation. Post breakout, there was a marginal retracement toward the neckline area, the breakout zone of the pattern, and again now we are seeing gradual recovery from that zone. So the life insurance as a basket also is performing well. SBI Life, ICICI Pru, they are also participating in the move. But SDFC Life post this retest and recovery, that reaffirms that the stock has a potential to inch toward the previous swing high, close to around 740, 760 levels, as long as we are holding above this 620 mark. So this is one such stock which is available on retracement, on decline, which one can look at for accumulation. And lastly on the list, Indigo. So Indigo also a similar structure that post the consolidation phase, we had a very strong move toward 2700 mark. And during this recent retracement, there was not much price-wise damage. It has hardly retraced roughly around 200 points from the record highs. And it has been trading around 2400 mark for last 4 weeks, which has resulted in formation of a fresh buying pivot. So the risk reward again is favorable. That's why one can look at Indigo for fresh buying. So net, both indices, Nifty or banking index, we have a positive view. 20,000, 20,300 is what we are eyeing in Nifty. For banking index, we also expect this positive tone to continue with 45,600 to 46,000 as a target area. Stock specific, Bata India, SDFC Life and Indigo are the candidates that one can look at to accumulate. So this is all from the presentation part. Now we will open the floor for a quick poll and then we can start with the Q&A. So please fill in your feedback and then we can start with the Q&A. Please quickly fill this feedback and once you're done, you can start posting your question using that Q&A tab in front of your screen. And please restrict your queries to the sectors or the indices, key indices, not individual stocks, so that it benefits the larger audience. All right, let's start with Q&A now. Yes, so first question, sugar sector. So sugar as a sector, we are seeing noticeable recovery. Why I'm saying recovery? Because not all the stocks were trading with the positive bias or in an uptrend. And selectively, yes, we are seeing noticeable recovery across sector. But within the sector, one should be particular about chasing the stocks, because we all know that stock related to sugar and other agri-related commodities are more of cyclical in nature, and we see prolonged phase of consolidation also. So be very strict with your stop losses when you are chasing the momentum here. So yes, as a sector, we have a positive view, and stock like Triveni, Renuka, Balrampur, these are some of the names which look positive to us. Okay, so Yash has a question, what all moving averages that we have placed on chart? So Yash, it's the EMAs, exponential moving averages, that we usually refer. 20 days, 50 days, 100 days, 200 days is something that we refer. So 20 days indicates momentum, that we have momentum in market. 50 days indicates that whether the trend is positive, that recent swing is intact. 100 is somewhere on a similar line, just that the momentum has faded out, but the trend has not reversed. And 200, of course, is the trend reversal. So whether the long-term trend has changed or not. So 100 shows that medium term, and 200 shows the long term. Okay, so there's a question from Mr. AR on why packaging polyfilm sector is going down. So honestly, we don't track this sector because it's a part of the subsector of manufacturing, and so honestly, if you can give few names, maybe I can give an attempt based on the chart formation on those particular names. But as a sector, I seriously doubt that these stocks were in news or witnessing any traction. Yes, next question on chemical sector from Mr. Rajesh Naik. The chemical, yes, of late, we were seeing some of the stocks witnessing decent traction. So in line with the, sugar, chemical, textile, paper, these are some of these sectors which were, witnessing decent traction. But again, I would say that, when we chase these names, since they are cyclical in nature, means they move for a shorter time duration and then they go for a prolonged period of consolidation. So one needs to be very stick with their stop losses, and very good at managing those positions also in case if they correct, because the corrections are also severe if the move is vertical. So in this chemical space, selectively, some of the names which are consistent performance, like Navin Fluorine, which is consolidating around the record highs. Then we have Deepak Nitrate, which is witnessing recovery. So some of these names which are consistent performers, but again, when in the market like this, wherein we are seeing the key sectors performing well, and we have a clarity view also that the top performing names, we have a clear view. I feel chasing names in the cyclical is, especially when the mid cap and small caps are at the record high, and there is a possibility that we may see some profit taking consolidation now after 5 months of strong up move. I feel it's slightly risky, so please plan your trades accordingly. Okay, so Mr. Ramalingam Sora has shared the feedback on our recommendations. So he might be associated with us as a client, and so thank you for the feedback. And he needs view on cement, FMCG, and jewelry. Cement, yes, Mr. Rama, that we are seeing decent up move, and within the cement space, Ramco, Dalmia, Grasim, Ultratech, these are the top names, wherein we are seeing consistent traction with marginal consolidation. Then we have some of these names from the small cap basket also, like Prism, Heidelberg, wherein we are seeing on and off kind of a participation. So I would recommend to stick with the top names like Ultratech, Dalmia, Ramco, within this cement space. In FMCG last week, if you remember, those who have attended our webinar, we talked about the possible underperformance from the sector, largely due to the negative tone of the top two FMCG majors like HUL and ITC. So that continues, this week also. They failed to make any considerable participation. But at the same time, Colgate, Marico, Britannia, though Britannia is still has to show the recovery. Colgate and Marico rather were the decent performing names. So within the FMCG sector or any other sector, when we are looking for fresh position, stick with the names which are performing comparatively better within the sector. So of course, Colgate and Marico, alongside with Dabur also to some extent, fits the list. Okay, so Polyplex, Moltec. So now, in fact, you can add Uflex. So earlier we had this phase of, a very strong directional move in these names, but now we are seeing with stock related to these sector, like paints, others which were like the main clients to those companies. Are witnessing profit taking. So that could be the reason that why we are seeing this underperformance. And it could be a phase of consolidation after the strong up move. So for a time being, until we see some meaningful, recovery. See, especially when we talk about during this webinar is more about like, short-term approach that what we are anticipating in a week or, two. From the medium term perspective, it might be a good buy, but from the short term perspective, I feel that until we see some participation in line with the market, then only one should attempt. Otherwise, one should avoid. Okay, next question on railway sector from Mr. Deepak Kumar. Okay, so I understand that why we have question on railway sector because the kind of momentum that we are seeing across the board. But is it good to chase this momentum? So that is what I have answered during the presentation itself, that now, after this 5 months of successive rise in mid cap and small cap, by the way, there is no criteria that, they can't move for further northward in 6th or 7th month. It's just that after a very strong rally, they should some see consolidation, some, correction. And if we don't see such, phases of consolidation, the risk to reward is not favorable. So that's why at times we avoid chasing momentum until we have a favorable risk to reward ratio. So that same holds true for, defensive stocks from the shipping part, railways, and the other defense related stock also. So now one needs to be very, very disciplined when it comes to, trading the railway stocks. There could be a day wherein, the stock opens on the flat inches higher, but at the end of the day, it might retrace to 4 or 5 days low. So be very specific with your stop losses when we are chasing momentum. And especially in the railway stocks, where we've already seen like 4 times, 5 times of game in a month, in a year's time. Okay, so there's a question that can we show some penny stocks? So penny stocks, Mr. Shlok Agarwal, we avoid, and we even do not recommend to our clients because the absolute price is not a criteria for us. Means we look for companies which are fundamentally sound, wherein we have some sort of clarity when it comes to the overall company history and all. And usually, if you are new to this markets, investment in penny stock is like going for a gamble wherein you are not sure of which side of table that you'll be sitting at the end of the game. So I strongly recommend to avoid, in case if you are just experimenting with 4-5% of the entire portfolio, then it could be just a personal call. But otherwise, please avoid looking for the multi-bagger ideas and penny stocks. Okay, next question from Mr. Benjamin on hotel industry. So yes, this industry is we are witnessing consistent buying, and it's not only just to any particular name, it's across the sector. So Indian Hotel, Lemon Tree, Chalet, all these stocks are doing well. But again, I would say that since we have seen decent surge across the board, including the hotel industry, do maintain a trailing stop loss approach when you are holding these names, or even if you are buying fresh. Trading stop means that if you bought it at 100 and your stock goes for 105, trail your stop loss to 100, 203. If they reaches to 108, trail further to 105, so that you avoid the notional loss in case if the stock comes down. Okay. So today we've discussed about, Mr. Ayer have asked about which stock that we've discussed during the presentation. So we've talked about three names. First one was Bata India, second one was SDFC Life, and third one was Indigo. Thank you, Mr. Rama, for the feedback once again. Midcap IT, Mr. Rajesh Naik have asked. So, we had clear outperformance from the midcap ID names. In fact, we are still seeing the same. That some of the names like Persistent, Birlasoft, they've started recovering when the IT index was witnessing consolidation. And Persistent is trading at the record high. Birlasoft almost, inched closer to that mark. Then we have stock like Emphasis, Tech Mahindra, LTIM. They are also catching up. So yes, mid-cap IT basket looks cool, and HCL Tech from the large cap IT name and TCS also you can add to that list wherein we expect catch-up recovery. Okay, so we don't cover the short-term, the IPOs and the other, related primary market related during this webinar. Okay, so largely we have answered all the queries. Rest of the queries are more of stock specific in nature, which we avoid because we have largely covered the sector, almost major sectors. So one can plan their trades accordingly as per the sector and how the stocks are performing within that sector. So yeah, with this, we can end this webinar now. So thank you everyone for participating. Okay, so we have one, okay, on capital goods. So capital goods also, we have a positive view. We are seeing consistent buying, when it comes to the capital good names, barring L&T, Siemens, ABB, they are sitting slightly on the sidelines, but the tone has changed, means they are again, looking positive. So comparatively, if we compare it from LT to the other names, there's a possibility that the other might see the catch-up move because L&T was among the, best performing names in the last week. There could be a catch-up move in the other, capital good majors. So thank you everyone for participating. Next week, same time, we'll connect again. Thank you.